Hey, everybody, I got John Fodera on again. He's our go-to guy for everything credit, business credit, loans, lines of credit, factoring, project funding. Today, he's going to talk about factoring invoices and project funding. John, glad you came on again. Please let us know.
Thanks for having me, man. So again, like I always say this expression, but you can't build a house with just a hammer, right? You need multiple different tools. Well, you can't build a business with just a loan or just a line of credit. Every business should have a line of credit. However, there are other things to put into place. And the quicker you get that set up, the quicker that foundation is built, the easier it's going to be to grow and scale. So at the very bottom of that, of that base is going to be having good personal credit, good business credit, good cash flow. And then next, once that's established, there are other things that you need to put in place. So in the B2B space, okay, and the biggest challenge a lot of people have that are net 15, net 30, net 45, net 60 is their ability to grow and scale and manage their cash flow. Why? Because as you're doing your jobs, you are front loading salaries, marketing, materials, inventory, like anything you need to get that job built. This could be in manufacturing, it could be in trucking, it could be in vinyl graphics, anything that is B2B, okay? As long as it's not progress billing, anything that is B2B or B2G, business to government, should set up what's called invoice factoring. Now, what invoice factoring does is it allows you to grow and scale without worrying about your cash flow. And it does this because as you complete a job and you invoice it, you can get anywhere between 80 and 90% of that invoice paid the following day. And then typically it's only going to cost you 1 to 4% per 30 days. All right. So I'll give you guys an example. You just complete a job, right? You just made all these widgets, you shipped them out, and then you invoiced your client. Well, now that probably cost you 40, 50, maybe even 60,000 to produce. All right. And you want to move on to the next order. Well, if you factor that invoice, they're going to give you, let's say 90,000. That's the advance rate. So 90% of the invoice is the advance rate. They're going to give you 90,000. Your client is then going to pay the factor. That 10,000 is held in reserve. Once they pay, let's say they pay in 30 days. Once they pay, that reserve is released and then they take out their fee. So if their fee is 2%, they're going to take out the $2,000 and send you the 8. And what this does is it gave you immediate cash flow instead of waiting. And why that helps your business is you can move on to the next job, onto the next job, onto the next job, and you're giving up a very, very marginal amount of your profit margins in order to have growth, in order to have scale, and also to make sure that you don't have to borrow to keep up with demand. Because when you start borrowing with the intent of keeping up with demand, what happens is eventually that line of credit taps out. Eventually you run out of that loan. And then you're still stuck in the exact same position you were, except now you have all this debt. Okay? And this is coming from somebody that makes a living off of helping people grow and providing debt and financing solutions. So you don't want to use a loan or a line of credit for those needs, right? You use invoice factoring. And some of the most common things I hear is, hey, I don't want anyone speaking to my clients. Or, hey, how's this going to work? Well, let me tell you something. Every single big company that's B2B uses that program. It is very, very common. Your clients are not going to think any less of you. In fact, they're going to say, hey, this is a really, really smart entrepreneur who gets it and that wants to grow their business and not deal with the issues that come with scale and with growth. All right. So that is invoice factoring.
Well, I'll speak on my experience with it. So I'll tell you my hang up was I was thinking that my customers wouldn't like that. And I don't know, I was like, I don't they're going to think I don't have money or whatever it's going to be. I created these things. John, let me know that's not going to be the case. All these big companies do it, and I did it, and it was not even a blip. Nobody even thought about it. They're used to doing these things. I'm going to tell you a couple of hidden things in here. So, my experience is, so I used to, sometimes I'd do $1 million worth of work. I have to wait 60 days, 30, 60 days to get paid, but I had to pay all my subcontractors, all the things. Let's just call it 60%. That means you got to have $600,000 every time I take on another $1 million worth of work in your account. It's gone, and now you got to get it back. This is so easy because I go do all the jobs before I even pay them, because we'll do a job. Say we did all these jobs on Thursday and Friday, all these big gutter cleaning jobs. We send those invoices in to them on Friday. We send them out, and they basically they wire the money the same day, 85%. So in that case, I would get $850,000, but I only have $600,000 worth of stuff I have to pay. So I'm sitting on cash. It's an incredible way to grow. Also, so when they signed me up, I think they signed me up, first started at $1 million kind of line of factoring, meaning they were okay like doing $1 million on my thing. And then we reached it. And then I get an email, hey, you have to increase your line. And I said, okay, yeah, I want to. What do I need to do? They're like, just request it. And I'm like, how do I do that? He's like, just send me an email. So I said, 1,750,000. It was approved. There's no checking it.
Done.
I don't, it was so crazy to me. I was like, maybe I should just say 10 million. But
Yeah.
the last part of that, it was so easy. And now I think we're gonna push it up again. The other part of that was they vet your customers for you. So before we invoice them, we know we're gonna do their job in the next 3 weeks. We give them a list of all the information, and they go through them and they check their Dun & Bradstreet, all these different things. And 2 different times they came back to me and said, we don't want these, you don't want them. They don't pay bills. I mean, they just saved us a headache, because the truth is, every business washes 3 to 5, 4, 5% of things where people don't pay. They're now saving you some of that, which is this apartment complex. I would have billed them out at $10,000. I might not got it paid.
Yep.
So they're saving. Yeah, that's a free service as part of the factoring. I'm gonna be honest, I wasn't doing that.
Yeah.
I wasn't doing
these guys
that.
underwrite your clients for you, right?
They're underwriting your
Here's
clients.
the thing.
So,
with invoice factoring, you're a little different. You have a very, very strong base in all terms, but some clients don't. So when you factor invoices, it's not about your credit, right? It's about your clients.
yeah.
And it will save you a ton of money. And you have to understand the reason why people are in this position is not because you don't know how to run a business. It's actually because you do know how to run a business, and you're growing and scaling, and just the mechanics and the financial numbers don't match up, because the amount of money you'd have to borrow or dump into the company to keep up with growth, okay, is exponential. And so when you set something like this up, you don't have to worry about it. You can sleep better at night, and it's going to cost you a fraction of what it would cost if you borrowed the money, even if it was like an SBA loan or a line of credit. Okay. And there's ways to set these up. You really need, when you do invoice factoring, you need to set up the invoice factoring first and then open the line of credit, which obviously I could help with. All right. But this will be a game changer for you guys, like absolute lifesaver. And there's zero reason, if you are B2B, that you are not using this. The only time it doesn't, that it will be problematic is if you're doing progress billing. Can't do that. And you can't do it if you're working with insurance companies, because insurance companies, we all know, they don't want to pay you what you're invoicing.
Right. And John got me a line of credit as well, but I don't use it for invoices. So it's like, it's always ready to go. So if I have an opportunity, I can jump on it. Whereas if he gets you $100,000 line of credit, and then you use that to essentially factor your own invoices, then when something comes up, you don't have any money and the bank's not going to give you because you got $92,000 on it. Yep. So it's been a game changer for me. But people think it's like going to be expensive. I look at it like this. I was telling one of my buddies, I'm like, it's like if you have $100,000 invoices and I say, hey, I'll give you the 100, I'll give you 85,000 of it. And then when you get all the money, just give me like 1 or 2,000 and you keep the rest. He would be like,
Yeah.
what the hell is this guy talking about? Why would he do that? That's what
Yeah.
factoring does, but they're doing it at scale to hundreds of companies. So they're making a nice return. But they're not taking 6,000 of your 100,000. They're not. It's not that. So game changer.
Exactly.
What
And
about?
now here,
Go ahead. Go ahead.
well, I was gonna say, here's the yin to the yang, right? So it's called project funding. Okay, project funding, again, it's credit agnostic, meaning it's not up to your credit. You do have to have strong financials. You have to have, all your books in order, but it works off of your work contract. Now, you can use project funding in conjunction with invoice factoring. However, project funding will also work if you are doing project progress billing, or you have a big job to complete. So I'll break this down, right? A lot of times people don't take on larger jobs because they don't have the upfront capital to float it, right? So think about it like this. You get $1 million job and you're somebody that's usually doing $100,000 jobs. Well, $100,000 job might cost you 20 to 40,000 to get off the ground. When you go and try to go up to that next level and you want to do $1 million job, you have a contract, it's a commercial contract. Well, you need some money to start. What do? You use project funding. So project funding will give you 20%, okay? Or sometimes a little bit higher, but let's just say 20% of whatever the value of the contract is up front. And then you can get the job started. When the job pays, it pays into an IOTA account, which is just an account between you and the underwriter that you own, but they have control over. And so what they'll do is they'll take out the amount of the draw, like the principal they gave you, plus 5% per 30 days. Okay, so meaning if you had it out for 30 days and you paid it back, it would cost you 5% of whatever you drew. Now, if it's $1 million contract and you only needed 100,000, right? So you drew 100,000, and you get paid the 200K into that account, they're gonna take out the 105 and send you the 95. And now you're off and running to the next job, or you have the money to cash flow the rest of the job, and it didn't cut into your margins. All right. Now, what I can tell you, if I ever set anyone up with invoice factoring or project financing, they've never left that. They've never left those companies. They've never left those programs. Why? Because it makes their life a million times easier.
Very easy.
And in fact, what I do is I train and teach my clients that if we're going to do project financing, you're going to bill. You're going to bid in the project finance.
You're going to figure it out.
So if it's a $2 million contract, right? And you can draw 400,000, and on that 400,000 it might be out for 60 days. What you do is it's 5% a month on the 400K. So you're going to be looking at paying $40,000 in cost for that, at max 400,000 in cost. I'm sorry, 40,000 in cost on the 400, right? Because it's out for 60 days. So you just add that 40K to the bid, and guess what? You just got your client to finance the whole job for you, and they have no idea.
You're not paying for that shit. They're paying for it.
They're paying for it. And in fact, it's actually a little less than 5%, but I rather overshoot.
And in order to do these big deals, you have to have this stuff in play. You can't compete, because whoever's doing it is going to be doing these things too. You're never going to compete on a cash level. Like I talk to guys and landscapers, and it's like, oh man, you got to wait 60 days to get paid. I don't know if I could take this complex on. Yeah. What if you got paid the same day, 85%? Would you do it? Yeah, I would do it then. Yeah. That's how these companies, you think these landscaping companies doing 100 complexes are waiting on everybody? They're not. This is how you compete with them. You can't compete the other way. You got to just think differently. You got to get people in your network like John who can help you with these things. You don't have to be an expert on finance. Just do your business, run your business, and then plug people in like John. This is the way to do it. This is how you get to making millions of dollars and not tens of thousands.
It's funny you said that. I have a very good friend, client, who has a massive landscaping company, does about 20 mil. he actually uses both project financing and invoice factoring. And after I gave these programs to him, explained how they work, guy sleeps like a baby.
Yeah. I didn't sleep well a lot of times. Sometimes I'd be up at 2 a.m. I tell you, John, I got like 1.2 million on the street. That's not comfortable. I would think
No.
about if I was in a car accident, like how are we gonna collect that from my estate? I had a whole write-up from my mom. My mom's 80 years old. I'm telling her,
Oh my
hey, you're
God.
gonna have to go collect this shit. Because I want to make sure that my son gets this or whatever. Like,
Yeah.
I was like, remember one time I was writing, I'm like, this is
That's-
craziness.
That's nerve-wracking.
Yeah,
That is
now
nerve-wracking.
it would already be in the account and then they're gonna collect it. The
Yep.
factoring company, so they collect everything. They even go back and forth. You can have different things. They'll, if somebody gets behind, they send them a notice.
Yeah.
In our thing, we say, hey, we'll be the first people. We let people know at 15 days. It's not late till it hits 30, but at 15, we'll say, hey, what's going on with, can you send that invoice in? At 30, we do it at day 34. They're making phone calls on your behalf for you.
Yeah. Think about it. They're doing underwriting for you and collections and accounting.
And and then they can also step in if there is an issue and the person doesn't want to pay, they can step in and help you collect. It's
Yep.
the cost is phenomenal. It should be so much
minimal.
more.
It's way cheaper than any other type of financing when you actually add it up.
And I build it in too. I figured it out on a simple spreadsheet. What is this costing me per $1,000 on customer? And you build it into the cost.
Yep.
And that's just how it goes. It's not that much money. It's not like I'm adding 20% on people's bills. It goes up 3%.
Yeah.
They cover
Actually,
it.
at 3%, you're making money.
I do make it. I gotta make it all for myself. I gotta take John out on a boat in Florida, and I gotta have a little side cash over here.
Yeah,
Yeah,
that sounds
I
like
do.
a deep sea
I
fishing
make it a
trip.
little higher. Always make it higher.
Sounds like we're going deep sea fishing when you come down here.
Yeah.
Oh, that's funny. That's good though. But guys, this is the difference, right? This is what's going to get you to that next level. It's the difference between you worrying and staying up late at night, or you have predictable, repeatable scaling processes that aren't going to cost you money, right? At the end of the day, you're gaining peace of mind, you're gaining cash flow, and like Kevin said, if you're really smart about it, have them pay for the financing, right? That's really what you're doing.
Always. John, what are we going to talk about next time? And then in the comments, guys, put anything you want John to talk about, lines of credit, whatever it is.
Yeah. So
maybe we'll talk about the SBA flash loans. That was interesting. We can bring you on next week and do the same thing.
Why don't we I will talk about an SBA flash cap. We could do a longer one, SBA flash cap and then acquisition. And I'll give you guys 3 ways that you can try to buy businesses. Okay. So we'll do SBA flash cap, acquisition. The only thing I ask you guys, Kevin will post the links. Join the YouTube. If you want one-on-one coaching, that link will be in there too. Not one-on-one, but one of many. I have a group with experts in there. I have all the materials already done. And you have access to my entire network, which is, I don't know, pretty valuable, I would say. Yeah. And if you guys need anything from me, right, you need to set up factoring, you need to set up project financing, you need a line of credit, reach out, man. I'm very, very readily available. Like Kevin, if he texts me, he's getting a text back in,
he does,
30 minutes. If I take that long.
Always right back. So next time you're going to talk about 3 ways to buy businesses.
I'm going to talk about buying businesses and the flash cap.
And flash cap. Give me like 45 seconds just on flash cap. I'm going to make a little reel. I'm going to put it in before we do it.
Sure.
All right.
So the SBA,
go ahead.
SBA flash cap is the absolute easiest way to get an SBA loan. All it is a traditional 7A. With all you need is 2 years of tax returns, banks, an application, a personal financial statement. We get it done in 14 days. It goes off of 30% of top line revenue from the prior year, max of 150K per tranche, max of 450 over the course of time. It's a 10-year loan, 7.5% interest right now. Okay. And it's an SBA 7A. It's just the quickest one. And this is a beta program. So I don't know how long they're going to be doing this.
So you're saying 14 days. So if somebody gets in contact with you, gets you this stuff inside a week, they basically in 21 days, they can have that money sitting in their account.
Correct.
That's fast.
Yeah.
Done.
I'm waiting for my accountant to do mine.
This is gonna be great. All right. Great having you.
I
I'll talk to
appreciate
you,
it, brother.
All right, bro.
All right. Take care. Thank you.